Welcome to the headline. I'm Dave Briggs here on the floor of the New York Stock Exchange. Friday's much anticipated speech by Fed Chair Jerome Powell will come at an altitude of more than 6,000 feet above sea level. But the Jackson Hole address comes with much lower expectations after news earlier in the week. Here to discuss that is Brian Vendig, Chief Investment Officer, MJP Wealth Advisors. Good to see you, sir. So what did the Fed minutes, or the summary, as some call it, suggest is coming when you digest the numbers we've seen this week?
Yeah, I think investors were pleased to see in the minutes that the debate around Fed cuts were actually pretty active, and it heightened the expectations that we're definitely going to see some cuts on September 18th at the next rate announcement. And I think also investors are really key to see whether or not Jerome Powell is going to take a little bit more of a forward-looking perspective in comments about the path and trajectory of these rate cuts when we think about closing out this year and what to expect for next year. So really a lot of attention is going to be given tomorrow, and I think those probabilities are going to start changing, Dave, as we start thinking about rate cuts for September and the next series of economic reports.
Let's drill down that a little bit. How big a cut do you think is coming in September, and how many the rest of the year?
Thank you. Yeah, I mean, I definitely think that right now it does look like, assuming economic reports don't surprise, and the trends on wage income growth continues to moderate, and we see some overall inputs in inflation moderating over the next couple of months, that we could still see about 0.5% or 50 basis points worth of cuts in September. If there is any little trend issues with some of the data and some of the major CPI reports leading into the Fed meeting, then maybe we might move that back to 25 basis points or 0.25%. And I still think another rate cut's in the cards when you think about the slowing labor economy. We got a jobless claims, unemployment claim data that came in this morning that was slightly above expectations. So a slowing labor market is what the Fed is now focusing on, which means supporting the economy in December and over the course of next year, I still think is a possibility for further rate cuts in 2025.
It's great news for a struggling housing market that has shown some glimmers of hope. Do you expect, though, anything close to a mission accomplished moment on inflation? And if not, what is Powell's central focus now?
Well, I think Powell has clarified that their focus is between price stability and making sure that the U.S. economy does not go into a recession. Obviously, that Goldilocks or soft landing scenario. And I think from a timing point of view, they recognize from these Fed minutes that action is needed over the course of the year. I don't know necessarily if we would say it's mission accomplished, because we're not operating at this 2% inflation target. So, Dave, I think we got to be a little bit more patient about that as we move into next year. But the trajectory of the economy is showing that there's slower growth. This is the treadmill that we were on domestically before the pandemic started, just to remind everyone. And I think that's the direction of where we're going. And as long as rates do come down, I think it's actually going to help the housing market, because we might actually see more supply come in, which would moderate price. And that's a huge input into inflation.
Boy, I hope somebody asked Jerome Powell about both candidates' economic plans, which could actually drive inflation up. You got tariffs on one hand, massive spending on the other. It'll be interesting if he could address that. So the narrative is overall soft landing for the economy. What could really change that narrative?
Well, I think you hit on it right there, Dave. I mean, policy decisions, error in policy decisions will disrupt this view, whether that's policy decisions from the Fed. And not to sound too political, but at the end of the day, what's happening on the presidential side, in our opinion, is theater, because legislation really gets passed through Congress. So what type of majorities will exist after the election, and what type of policies are coming out from a fiscal perspective from Congress? The other part of it is obviously the timing of consumer demand and how things move through the economy over the next 3 to 6 months. We're still expecting consumers to spend money, but just not to the same level. We've seen the price sensitivity, and as a result, a lot of that consumer spending expectation is baked into earnings, which we know is still chugging along at greater than 10% year over year, and we're expecting earnings to continue to grow over the balance of 24 and 25. So those are some of the tipping points, I would say, Dave, and we just got to be sensitive to the next set of earnings coming out in October and what these economic reports going into September 18th say.
Let's touch on the earnings we've seen the last week or two. We got mixed bag, really. What have you learned big picture from the consumer when it comes to Walmart, Target, TJX, and a few others?
Yeah, at a high level, I mean, we saw revenue beats of about 5% from publicly traded companies and earnings growth about 12 to 13%. And when you drill down, I mean, it's very clear that the consumer is making choice on price. We've heard that from the various retailers, as you said. We've heard it from obviously leisure and entertainment as well, where you're seeing a shift from, if I use Disney as an example, less in theme parks, more to cruises to find value. You hear it from the airlines, more domestic flights, less international flights. So we know that the consumer is stretched. Household savings rates are down. Balance sheets are down from COVID and prior income levels. But the one thing about America, I'm just going to put it out there, it's cultural. People spend money when they feel comfortable that they have a job. So as long as the job market continues to stay stable, then I think the services part of the economy is going to continue to chug along, but at a lower pace. And I think what we need to see is we have some manufacturing data coming out over the balance of the year to see if there's going to be a recovery in the global manufacturing sector, because there needs to be a retooling that needs to happen as we move through things next year, which is only going to help to support economic growth. So these are the things that we're paying attention to, Dave, as we finish out this year.
All right, let's touch on big tech, which really drove the markets for most of the year, in particular NVIDIA, AI spending. But there was a shift. Investors really went from rewarding this big spending on AI to seemingly punishing companies for spending too much on it. There is an assumption now that big tech is on sale. Are you buying it?
So we have been consistent investors in big tech, and in the short term, we did definitely buy on the dip, so to speak, to not only the mega cap tech market. To be perfectly fair, we're also looking at other areas in the equity complex that we think have been on for sale for actually some time. When you look at last year, 72% of stocks did not keep up with the overall market returns, and the disparity in returns, as you've highlighted through the first half of the year, have continued to play out between mega cap tech and everything else. So when we think about valuations moving forward, mid-cap stocks, small-cap stocks, in the large-cap space, healthcare, industrials, some of the other dividend-paying sectors like utilities or consumer staples have all places we think in a client's portfolio and the way we're thinking about managing risk. Because as we've seen over the last year, when there is a market correction, to your point, Dave, the winners are the more expensive stocks, or some of these AI or tech stocks are the ones that are sold off first. The NASDAQ corrects, brings the market down, and then investors start to, I would say, be reminded on what valuations actually mean. So I think on a going forward basis, we all can say volatility is not going away anytime soon. What the market's looking for is the power of earnings to justify these valuations, and recognizing that there's a stop-start sometimes in this AI innovation trend that's going to play out over 5 to 7 years. My best advice to investors is to come back to the classic expression of staying diversified and understanding what price you're paying for growth as we move forward.
Okay, finally, does that diversification include gold? I'd be remiss if I didn't ask you about it. Gold touching an all-time high, just above 2,500. I think we've gone below per troy ounce, but $1 million gold bar, first time ever. What does that signify, and can it continue?
Well, I think it signifies a few things, because gold is also a currency that investors use when they're fearful or concerned about uncertainty that's out there. And obviously, there's policy decision uncertainty, there's global geopolitical issues happening around the world that's well aware. Plus, we also have the U.S. dollar that's also has been volatile relative to what's been going on in the election and what's the expectation of future policy decisions. So I'll say it to you this way. I think hard assets, whether it's real estate, gold, being sensitive to some areas of the commodity complex, helps you kind of move through some of these periods of time when you're thinking about changes in interest rates, currency, and inflation. But at the same point in time, they're also highly volatile. So you have to understand some of the drivers around the price. And I would say the price of gold is driven by a few things right now, which is currency, fear, uncertainty, but then also at the same point in time, monetary bankers are buying more gold this year to backstop their local currency. So there is some macroeconomic factors that are impacting the price as well.
All right, great stuff there from Brian Vendig, MJP Wealth Advisors. Good to see you, sir. Thanks so much. Coming up, with the DNC wrapping up in Chicago, how will Trump and the Harris campaigns fare in the coming weeks? We're breaking down everything you need to know with an expert right after a short break. RFK exits and two former presidents take the stage at the DNC. Tuesday, it was Barack and Michelle Obama's turn.
Don't sit around and complain about things. Do something.
I don't know about you, but I'm feeling fired up. I am feeling ready to go.
Wednesday, President Clinton and Oprah took center stage.
We're all Americans, and together, let's all choose Kamala Harris.
The Democratic Party doing just that, party all week in Chicago. Barron's Ideas editor Matt Peterson with us now to break it down and to look ahead. Matt, good to see you. What, if anything, to you moved the needle for the nominee Kamala Harris throughout the week?
The big story here is just Democratic enthusiasm. You know, they know they're having a moment and they're going to seize it. You know, you heard a little bit of actually a downbeat note there from President Clinton, surprisingly. You know, he's usually all smiles, but he was giving Democrats a little bit of a warning not to get ahead of themselves. But still, they're riding high in the polls. And, you know, people need to take seriously the possibility that Kamala could win this thing.
There is a ton of energy and solidarity coming out of that week in Chicago. The vice president taking the stage as well and selling himself as a coach, reminding the audience to never underestimate a public school teacher. But it was honestly, I think, his son that provided the bumper sticker or T-shirt moment, "That's my dad," from the crowd, with the caveat that VPs rarely impact elections other than maybe Sarah Palin, and rarely impact policy other than Dick Cheney. What does Walz add?
Walz adds a sympathetic voice that people can connect to on the big issues that the Harris campaign is trying to push. I mean, that as far as economics and policy go, the things that I've sort of watched for, you heard exactly from Walz how the campaign is trying to sell their message. He had a big chunk in there about how Harris is going to fight for you on prices. She's going to lower your housing costs. She's going to make it cheaper for you to live in this tough economy. And that's a message that President Biden really had a hard time delivering, you know, in part because he oversaw the inflation and had a little bit of responsibility for it. But now we're seeing Democrats go on the offense, and Walz is part of that.
Yeah, up to her speech really has been about optimism and joy as far as the Democratic message. Her policies, though you mentioned, are coming into clearer focus. A much maligned anti-price gouging effort, higher corporate taxes will be part of her plan, increased child tax credit, and throwing a lot of money at the housing problem. What might resonate among voters?
Well, the housing problem is a big one. You know, the Trump campaign also likes to talk a lot about this. J.D. Vance likes to talk a lot about this too. So, you know, voters are really concerned about it. It is also one of the parts of inflation that's been the trickiest to get down, the fact that, you know, housing prices keep going up and up and up, and the Fed really hasn't been able to do very much about that. You know, Harris's plans here are still kind of coming into view. She wants to make regulation a little easier to build more houses. I think a lot of folks agree that that would be great if we could do that in this country. Not entirely clear how successful that effort will be. You know, Biden has had 3.5 years to do it, and he hasn't really succeeded. She wants to hand out more money to first-time home buyers to subsidize down payments. That probably sounds very catchy to voters. I suspect a lot of people will like that idea, although it may just drive up the cost of housing. And then there's a whole set of things she wants to do on taxes for working families to try to cut taxes and really create a new benefit for parents of young children in the first year of their lives. All this stuff sounds great. As the kind of grumpy macroeconomic focused reporter that I am, you got to point out that it's not really clear how they'll pay for any of this stuff. We've got record high deficits right now outside of a national emergency, and so far it looks like Harris's plans may add to that.
Yeah, I think with Oprah taking the stage, her economic policies are largely Oprah-esque. You get a car, you get a car, you get a car. It was a lot of free stuff throwing around. What do you think in particular leaves her open to attack from Trump, from Republicans, and if she ever sits down for an actual interview?
We'll see if she'll do it. She said, I think, that she's going to give one at some point in the next month or so. But clearly they're benefiting from this kind of strategic ambiguity, as one analyst put it, in how they roll out their policies. She doesn't really want to get pinned down on everything she's saying here. It's to her benefit, like I said, to try to go on the attack and try to, get out ahead of the inflation issue, because that remains the thing that she is the most vulnerable for. It's the thing that, voters hate the most in this economy, and it's going down, but it's not, still at the level that we had under President Trump, which he will remind us at every possible second. A lot depends on sort of what the Federal Reserve does in the next couple of weeks here. If it starts trying to ease those prices, if it starts trying to cut interest rates, maybe voters will sort of take their minds off of this issue. I think that's kind of what Harris is hoping for here.
Indeed. Also, we find out independent Robert F. Kennedy Jr. expected to drop out of the race. He's expected to endorse Trump, perhaps for a position. He's around 5% in the polls, which is not a lot, but it could be enough to swing this election if all of his support goes to Trump. Will it?
I don't know if the RFK is going to have as big an effect on the election, even in dropping out, as he had hoped to. There are certainly a lot of fence sitters in this election, and the truth is that both of the campaigns, they're not really making a big effort to bring them over on either side. Yeah, I think probably RFK's exit helps Trump a little bit on the margin, but really what you're seeing is this very close fight for working class voters that's going on in Pennsylvania, Wisconsin, Michigan, elsewhere, the states that are up for grabs in the Electoral College. And there it's about unions, it's about tax cuts for the working class and the middle class. Those are the things that Trump and Harris are clashing on. I mean, there's a reason why they're both going after no tax on tips, right? It's because it plays well to working class voters.
Yeah, we don't know that much about the Trump policies either, other than tariffs will be a central part of it. What do you expect the messaging to come out of the DNC from the Trump side as we go into the first debate?
Well, Trump is basically calling Kamala Harris a full-on socialist, right? I mean, they seized out on this price controls thing. That policy is probably less than meets the eye, and it's certainly less than what one Republican president, Richard Nixon, put into place. The guy who actually put price controls in. But Trump is going to hammer her over this. He wants to remind, for instance, Cuban voters in Florida, Cuban Americans who cared greatly about communism, that this has some whiff of that. And so he's going to keep hammering that line. Every time you hear the Democrats talking about a new benefit, Trump is going to claim that this is just Kamala rolling out the welfare state, as Democrats have always done. That's what I expect to hear from Trump.
Yeah, I was surprised to see them roll that out. It seemed a bit half-baked. Finally, an Economist poll found Kamala Harris with a 13-point lead among women. Trump is up 7 with men. On the surface, it's boys versus girls. Who wins that if it comes down to that simple metric?
Probably Harris here. I mean, this was the Biden campaign's message before it dropped out, and I think Harris believes it too, which is that abortion as an issue in 2022 drove a lot more Democrats to the polls than people were expecting before the vote. And you did not see a red wave in 2022 in the way that you often expect to, and the first midterm election of a president's political career. So that's a big part of why Harris is playing up the talk around Roe v. Wade and abortion policies, because she thinks it helps turn out women. I mean, if you've heard Trump griping recently about why suburban women don't like him, he clearly doesn't have a very effective message here on why women should vote for him. So, his struggle as always is to build above that base of like 40 to 45% of voters who will like always turn out for him. And he's really struggled to push above that ceiling. And there's not a lot of evidence so far that he's succeeding here yet, although there's, still some time for the election.
Yeah, there are ultimately just far more registered female voters than men. So really, in the end, comes down to turnout. Our big thanks to Ideas editor Matt Peterson of Barron's. Appreciate it, sir. Welcome back to The Headline. Here are some of the top business stories you may have missed this week. Some unsettling news for the labor market. The U.S. economy added 818,000 fewer jobs between 2023 and early 24 than previously reported, revealing a weaker labor market than initially believed. Revised data from the Labor Department shows monthly job growth averaged 174,000 during the period, down from the earlier estimate of 242,000. A 28% reduction suggests cracks in the labor market formed earlier than expected, despite recent signs of slowing job growth and a gradual rise in unemployment. Layoffs remain low, indicating a cooling but not collapsing labor market. Major automakers continue to pump the brakes on the electric car revolution. Ford, the latest to scale back plans due to demand, canceling plans for a large electric SUV and writing down $1.9 billion in related charges. Instead, Ford will offer a hybrid gas-electric large three-row SUV, said Ford Chief Financial Officer John Lawler, quote, "Based on where the market is and where the customer is, we will pivot and adjust." Ford says its EV business is on pace to lose about $5 billion this year. A federal ruling may impact 30 million people and trim wages by some $400 million over a decade. A federal judge in Texas blocking a ban on non-compete agreements for workers, which was set to take effect on September 4th. Judge Ada Brown ruling that the Federal Trade Commission, or FTC, lacks the authority to enforce such a broad ban. Business groups, including the U.S. Chamber of Commerce, welcome the decision, arguing the FTC overstepped its power. The Biden administration considering an appeal. Non-compete agreements essentially make it harder for workers to quit and work for competing companies. The future may be all about investments in artificial intelligence, but in the present, nothing beats good old-fashioned gold. For the first time ever, a gold bar is worth $1 million. The price of gold reaching an all-time high north of $2,500 per troy ounce. That's up more than 20% year to date. Higher gold prices can be a sign that investors expect the Federal Reserve to cut interest rates soon. The market is pricing in a rate cut at the Fed's next meeting in September. For Starbucks, it's officially fall. Starbucks bringing back its pumpkin spice latte earlier than ever, starting Thursday, August 22nd, marking a two-day advance from last year's return. This launch includes Starbucks' full autumn menu with pumpkin and apple-flavored offerings. The PSL, a staple that significantly boosts Starbucks sales during the fall, celebrated its 20th anniversary this year and has inspired a wide range of pumpkin spice products across various retailers. The earlier return aims to reinvigorate sales as Starbucks faces challenges. That's going to do it for this week's edition of The Headline, but don't go away. Much more Cheddar up next.